The U.S. equity markets have seen 3 straight years of double-digit percentage gains and 2 straight years of record ETF inflows. Now, the launch of crypto trading funds have played a key role in the trillion-dollar plus of inflows. AI and tech ETFs are also attracting investors, and the AI rally has driven the major markets higher since 2023, while data center infrastructure emerged as a leading sector last year. Joining me this morning to weigh in is Brian Walsh, Head of Advice and Planning for SoFi. Brian, good morning. Thank you so much for joining me. So first, tell us what's behind the record ETF inflows we saw in 2025.
Yeah, first of all, thank you so much for having me. Really, I think this is a continuation of a trend that started several years back where really amazing product innovation by ETF issuers expanded the use cases to appeal to more investors. Like I look back early in my career where ETFs were really synonymous with index investing. And as a financial planner, I loved it because you got broad diversification, you got tax and cost efficiency, all inside that ETF wrapper. Still a great use case, but the innovation really expanded the benefits to more and more types of investors. For example, actively managed ETFs. It's been the most funds launched in 2025 were actively managed funds. They now outnumber passive ETFs and got just under a $500 billion of inflows last year, just appealing to more active investors. At the same time, you mentioned thematics. You also see trading. Most people think of ETFs as a passive long-term vehicle. Now we have levered, inverse, and even alternative income ETFs. So it really is expanding the job to be done of ETFs to meet investor interest that's caused this really rapid increase in inflows in ETFs.
Yeah, and you just mentioned thematics, and thematic investing focuses on a theme, and artificial intelligence has been a key market theme since 2023. So, how do you think the AI trade will play out in 2026?
Yeah, we really see AI as a long-term structural trend that honestly, it's moved at an extremely rapid pace in the last couple of years. So it's easy to understand why people say, okay, is it in a bubble or is it about to burst? And at the same time, it's always trendy to be a contrarian. You look at the last, handful of years, there was, okay, US can't keep outperforming international or growth can't keep outperforming value. And, eventually those people will be right, but at what opportunity cost? So, looking back at 2025 with AI, the performance was largely driven by earnings growth, not by multiple expansion. And we continue to expect to see more capital expenditure as the build out of AI infrastructure expands. And that's just one piece of the story. That's the build out. The adoption piece is going to be another exciting phase where we see more and more businesses adopting AI as a part of their customer service experience or internal productivity tools. So as we look at this year, it's really about diversifying across AI. So we're not just talking about, chip manufacturers, maybe we're talking about data centers, power suppliers, cyber, companies that adopt AI and how it impacts their businesses. And that's really the focus that we took with our newest ETF that launched late last year, AGIQ, which focuses on agentic AI, where it really focuses, both on the enablers and then as well as the people who adopt it or the companies that adopt it to get both sides of the coin.
And finally, Brian, before I let you go, I do want to ask you about rules-based ETFs, which follow a predefined algorithm. So tell us about the growth and what it says about investor behavior as well as risk appetite.
Yeah, I don't know if it really says as much about investor behavior and risk appetite as it speaks to how ETF products have evolved over the years. I think rules-based or actively managed ETFs, a lot of times they get bunched together into one broad category, when in reality, you have a bunch of different flavors inside of that. So you could have actively managed funds, which are more the traditional kind of replacement of mutual funds. You also have for defensive investors, they have access now to actively managed buffer strategies. You have income-focused investors that now have, access to alternative investment strategies or alternative income strategies. So it really is just saying, okay, ETF products are now meeting all different types of investors, not so much that investor behavior or risk appetite is changing.
Well, Brian, great to have you on the show this morning. Thank you so much for joining me, and thank you so much for sharing all of your insights today.
Yeah, thank you.